Good morning, everyone. Happy Friday. Pam Wandry here with Columbine Mortgage, and this is your Weekend Watch. This week we had CPI and PPI, both inflation data reports, come out. CPI came in at expectations. However, it is higher than it was 1 year ago. We were at 3.8% 1 year ago, and we're now sitting at 4.2%. So really reflecting those higher oil and gas prices. Gas is up 41%. Year over year. And so that's really having an impact on inflation, and that's also impacting rates. PPI came in high as well, at expectations, but high, both once again, highly driven by the oil and gas prices. So here at Columbine Mortgage, we luckily, our benchmark rate remained flat at 6.5%, so good news there. Here in the Denver metro area, we had another solid week of new listings coming on. Over 1,400 new homes came onto the market. That finally pushed us over that 12,000 mark of active inventory on the market. So lots of choices for home buyers. It's interesting that obviously we're seeing a little bit of impact to the homes that are being listed, probably largely due to the conflict in Iran and people's concerns with what that's going to do with interest rates and market and all that, because we reached this mark a month earlier last year. So we reached 12,000 homes in May versus in June. So here we are, Columbine Mortgage. We had an average week of offers come out. About 71% of those got accepted, and over half of them had seller concessions, significant seller concessions. So overall, our offers were accepted at 2% below list price. That's kind of including those seller concessions, kind of showing the difference in the prices. So great opportunities for buyers right now, right? With rates kind of holding in those mid sixes, at least it's kind of a little stable right now. So buyers that are hanging in there are having great opportunities to be able to negotiate on some homes and get some seller concessions to either help with temporary rate buy downs or to permanently buy down or just to cover closing costs. All wonderful options for buyers right now. So this week, one of the things we wanted to talk about is that one of the most challenging things for buyers when comparing different loan options is trying to understand that relationship between the interest rate and paying down or buying points. And so, it can be really confusing when you see these teaser rates online with these below market rates, but they often come with significant fees and discount points associated with them. And so you really have to read the fine print there to understand what the costs are, because typically there is something going on there if you have a rate that's way below market rate. So it's best to have a lender that quotes around par and helps you understand those different challenges, and then from there make a decision that's best reflected for you. The way that we often look at these discount points to understand if it makes sense is we look at the cost of the incremental cost of buying down that rate and the monthly savings you're going to have on that payment. And when you do the math on these, this is going to give you an overall feel of how soon you are going to recoup those costs or break even. Oftentimes when you look at these online quotes, when they have these 1 or 2 point charges for discount points to get that rate, buyers will find when they do this little calculation that it can be 6 or more years often for that break-even point, which often doesn't make sense, because if you're going to either move or sell prior to then or even refinance, the upfront cost really isn't worth paying to get that, bragging rights for the lower rate. So if you have questions or want to look deeper into this, I'm happy to always help. Have a great weekend. It's going to be lovely out there. Let me know if you have any questions or need any numbers. I'm happy to do whatever to help you and your clients. Have a great day. Talk to you next week. Bye.